people will get on YouTube or on the news or whatever and be ultra bearish for months and months and months. And then when the bearish event happens, they'll be like, see, I told you. Yeah, you told me like 6 months ago, and I haven't been like, I've been doing nothing, waiting
Yeah.
for this negative news. I was listening to someone and they said Americans often make the mistake of comparing performance inside their own market. And so they're looking at like, how is the S&P performing against like previous years of the S&P or the NASDAQ or the Russell or A, B, C, and D. But everything is kind of housed inside an echo chamber of performance. And they said, but if you compare the performance of the US stock market to any emerging market, even the European markets, actually the US markets are trailing significantly. So yes, their returns are positive, but their returns are barely positive when you compare it to the outperformance globally. Global investors are making a lot of money investing in their own markets, but because the dollar is so cheap, it continues to allow them to hop back in, keeps coming back to the US because the dollar is just so cheap and their currencies being so strong and the outperformance of their local markets. They can just, trim 5% off the top of their gains and put it back into the US market, knowing 5, 10 years from now, Nvidia and AVGO and Meta and Google and all those companies are going to be trading at like 10 times what they're trading now if you can buy and hold that far out to the futures.